These are the types of refunds which we will be discussing today. Basically, IGST paid on zero rated supplies. In the case of zero rated supplies, first of all, let us discuss about some definitions like zero rated supplies. What is zero rated supplies? The government has defined the zero rated supply in the law, where they have said that export of goods and supplies or supplies to SEZ units or SEZ developers is zero rated supplies. There is a difference between zero rated supplies and nil rated supplies. Zero rated supplies has been defined as exports or supplies to SEZ, and nil rated where the rate of that supply is zero. Don't confuse between zero rated supplies and nil rated supplies. There are in zero rated supplies, basically exports or SEZ supplies to SEZs. There are two options wherein we can supply the goods or services on payment of taxes, which the taxes paid to the government will be refunded back to us, or the tax we can export the goods or services without payment of taxes, and the taxes which we have paid to the vendors from whom we have purchased the goods, the same can be refunded in a manual process. I will discuss on automated process and the manual process as well. There is a concept of duty drawbacks as well, higher duty drawbacks and lower duty drawbacks. There is a condition, the same will be discussed along with the refund clause. Second, we will come on the unutilized ITC. Accumulation of input tax credit due to lower outward supply tax rate or no tax rate on the outward supplies. In that case, government has provided us the benefit of taking the refund. The same in unutilized ITC, there are three types: exports, SEZ supplies, and inverted duty structure. Inverted duty structure is where the rate of tax, outward tax supply is lower when the inward supply rate is higher. Then come deemed exports. Government has defined deemed exports. There are four types of supplies we will discuss in the deemed export tab. The person who is supplying the goods that can take the refund, or the recipient of deemed exports can take the refund. There are two options. Then comes merchant exports. Merchant exports is also provided in the notification government. Earlier, there is a supply called Roga Crowd, removal of goods at concessional rate of duty. Government has provided the facility to remove the goods at a very low rate. In GST, the government has also provided the same functionality by providing a facility that the person can purchase the goods at only 0.1% rate of tax, who is actually exporting the goods out of India. Actually, the government has a policy that export the goods or services, not the taxes. When we supply the goods to out of India, then the taxes which we have to pay on that supplies will be refunded to us, and the amounts actually blocked in that actually we have purchased the goods to export those supplies. In that case, a huge amount of funds in the form of taxes as an ITC is blocked with the government, which we will be taking as a refund in a 60 days or 30 days span of time. The government has provided the facility that the amounts, that 99.99% of tax will not be blocked of the assessees who are actually the merchant exporters. They can avail the goods at 0.1% tax rate and supply those under LUT model. Then there are specified organizations like embassies, UNOs, canteen stores. Those embassies and UNOs are not Indian embassies. They are foreign embassies, and government doesn't want to tax those embassies. A refund policies has also been provided in that cases also. Thereafter, miscellaneous refunds like balance in the electronic cash ledger, foreign tourist who comes to India, purchases goods and take those goods to outside India. Many countries have this functionality to not to tax these foreign tourists. wrong payment, excess payment of taxes, taxes paid in the wrong heads, consequential refunds like appeals, litigations, we have to deposit, pre-deposits, the taxes for the appeal matters, or excess taxes have been paid and due to the pressure of the officers. In that case, when we win that appeal, the order came in favor of us, then consequential refunds can be applied. Budgetary support system, which government has provided in the initial period to those states or those entities who are enjoying the no tax benefits. Seva Bhoj Yojana, which is given to temples, gurdwaras. These are all the topics which we will discuss. We will be discussing today in our refund chapter. First of all, I am going to discuss on the IGST paid on zero-rated supplies. On export of goods, if we do with export of goods with payment of taxes, in that case there is an automated process of refund. The customs the customs sanction the refund automatically through the computer system. There is a process which we have to follow. Firstly, we have to export the goods. In that case, shipping bill is generated. On the basis of that shipping bill, let us discuss the second slide first. Here, exporter exports the goods and generates shipping bill on the customs IceGate portal through CHA or directly. Then he receives bill of lading, exports the EGM details, and on the basis of those details, he files GSTR 1 and GSTR 3B on the GSTN portal. Then GSTN portal transmits his data to the custom portal if there is no errors. We will be discussing the errors in the later stage. Then custom portal on verification of those details from the shipping bills which have been already filed or and the EGM details and the data transmitted by the GSTN. And after matching, if there is no errors, then the same is sent to the PFMS system for paying to the exporter in its bank account. Now this is the automated process. First of all, I have explained the automated refund process in which we pay the goods, we export the goods with payment of taxes. Now comes the, I am going to discuss on what is export of goods. There is a difference between export of goods and export of services. In the case of exports, when the goods are taken out of India, that means the export has been done. But in the case of services, there is a difference. In the case of services, there are 5 items which needs to be fulfilled. We will be discussing that in the export of services tab. In the export of goods, when the shipping bill and the EGM has been generated, it means the goods have been exported. No other condition is required to be fulfilled in the earlier period. But now government has added Rule 96 in which there is a condition is added that payment should come as per the guidelines of the FAM. If the foreign currency has not been received, then the benefits of export will be lapsed. And the person who has not paid the taxes is required to pay the taxes to the government along with the interest which he has evaded. But government in some cases, the goods which have been exported, which have been exported, and the payment should have been come in the 6 months or 9 months or 1 year slab as per the FAMA guidelines, but the payments received in a later period stage. In that case, government has also provided a circular, internal circular and the guidelines to the officials that no amounts of interest or taxes should be recovered from those persons if the foreign currency has received in a later stage as well. Earlier, in the case of audits or scrutiny assessments, government officers are forcing the assessees to first pay the taxes as the time period has lapsed, but they have received the payments after that period, so they are allowed to take the refund at a later stage. But to reduce the litigations on that matter, government has allowed the officers are not required to force the assessees that they should pay the taxes and interest on those transactions if actually the goods have been exported, because government wants to increase the exports and not demoralize the exporters. There is a condition in section 54. Firstly, refunds is covered under section 54 and read with rules 89 to 96. Thereafter, section 54, section 51 says who is eligible to take the refunds. Section 54.2 says what is the time frame in which the refunds can be taken. We have to, the government has provided 2 years time limit. In most of the cases, in major of the refund applications, there is a time frame of 2 years. 2 years from the relevant date. Relevant date in all the cases is separate. In the case of export of goods, relevant date is if we export the goods by sea, date on which the ship or aircraft in which such goods are loaded leaves India. By air, date on which the aircraft or ship leaves India. In case of land, date on which such goods pass the custom frontiers. If the export is through post, the date of dispatch of goods by the concerned post office to a place outside India. So this is the relevant date on from which 2 years shall be calculated. But initially in the GST module, we file the refund applications on a monthly or quarterly basis. So we actually 2 years is calculated from the date of export. But the returns in GSTR1 and GSTR3B are filed on monthly or quarterly basis. So time limits of 2 years shall be calculated from the date on which the returns have been filed or the due date which we have filed the return for that export of goods, for that shipping bill. In the earlier service tax or excise period, the same provisions avail. In that case also, when that return has been filed, that means we are going to take the refund, because in GST there is a condition, all the returns have been filed, GSTR1 or GSTR3B. In case of export of goods, government has increased very much due to the fraudulent refunds. Government has taken very severe actions on the exporters, and the government has provided a risk management process, and they have initiated that process through the arm that says DGARM. Through that, they are providing a complete process in which risk parameters are defined, persons who are exporting the goods and taking the refunds on the basis of fraudulent invoices, fraudulent ITCs are identified, and their thorough verification and a thorough verification process has been provided on those for those persons. Earlier, an applications by the DGRM was selected, and those applications or those persons, names of those persons are sent to the jurisdictional officers for the verification, and the jurisdictional officers checks the verification process, verifies the persons, their suppliers, vendors, and provide a report to the DGRM. On the basis of that report, if the red flagging is reduced, is made green, then only the refunds will be sanctioned to those persons. Otherwise, the refunds of that person is withheld. And that process is taking a very huge time. Recently, government has also changed that process and mentioned that verification and refund sanctioning process will not be done by the custom. The same will be shifted to the jurisdictional officer. The application on those risky exporters will be sent to the jurisdictional officer. A complete process is still awaited by the government. The government has to supply the complete process to the jurisdictional officers, that how they will sanction the refunds. First of all, custom officers will send the details of those risky exporters to the jurisdictional officer, and that details which they will send to the respective jurisdictional officer will be termed as refund application of that person in case of export of goods with payment of taxes. This is a matching criteria. In the case of what we have discussed in this slide, the matching criteria which custom portal IceGate and the artificial intelligence is doing. Invoice number and date of invoice should match with the shipping bill number. Invoice value, IGST amount will match with the shipping bill details. And in the given case, if the lower of those in the value mentioned in the shipping bill or in the GSTR 1 or the lower taxes have been paid, then the lower amount will be refunded, not the higher amount. Secondly, FOB value is considered by the government. Not if we are having a CAF value contract, then GST payable on the FOB value, whether we have paid on CAF amount or not, the value paid on FOB value, payable on FOB value will be refunded. Then nature of export, that is whether it is under LUT in GSTR 1 or with payment of taxes. These are the matching criteria which is matched by the custom officer. That the custom IceGate portal. Shipping bill number, shipping bill date, port code. IGST paid in GSTR 3B versus IGST payable in GSTR 1. If common errors, what are the common errors which a person conducts? First of all, in GSTR 1, most of the persons doesn't mention the shipping bill details. When we doesn't mention the shipping bill details, the data is not transmitted. Secondly, the details mentioned in the amounts mentioned in the GSTR 1 are higher than the amounts mentioned in the GSTR 3B. If there is a difference of rupees 100, that is tax payable amounts to rupees, the tax payable and tax paid. There is a difference between tax payable and tax paid with amounting to rupees 100. Then the data shall not be transmitted to the IceGate portal by the GSTN. So we have to see tax paid must be higher than the tax payable, or that should be equal. In GSTR 1, GSTR 3B, there is the persons commit errors that zero rated supplies are also mentioned in 3.1A or 3.1C, considering it as nil rated. But the government has issued several times, government has issued advisories stating that zero rated supplies are to be mentioned in GSTR 3.1B and taxes paid as IGST are to be mentioned here. If the person doesn't mention the same in GSTR 3.1B, then the data is not transmitted to the IceGate portal by the GSTN. But due to the continuous errors by the assessees and request representation sent by the associations or the assessees, the government has increased the time limit. Government has relieved the assessees exporters by saying that if the total of taxes in 3.1A, 3.1B, 3.1C is matching with the GSTR 1 total tax liability, then the data will be transmitted to the GSTN and by the GSTN to the IceGate, and then the refund will be processed. Secondly, a CA certificate is also required in that case, and a letter is to be written to the custom portal for processing of that refund. Otherwise, the refund should be pending till the assessee or exporter approaches the officer. The government has provided this functionality till 31st March 2021. Earlier, this functionality has been provided till 2019, which has been extended to 2025. Now coming to the other errors, the government has also provided a functionality at the custom ports. If there are several types of errors like SB001, which wherein shipping bill number is not matching, SB005 wherein invoice number or invoice date is not matching, or the invoice amount is in a variation of very much huge amount. In that case, a concordance table can be prepared and a letter that concordance table along with the proofs of shipping bill and invoice and IEC number and PAN number, the same should be provided to the custom officer. A specific refund cell has been created at all export ports, and the refund will be processed through that port in a manual process. What are the safeguards to be taken? Like in GSTR 1, if shipping bill have not been mentioned, then the same can be amended. The invoice can be amended in table 9, wherein shipping bill and invoice number, shipping bill number, shipping bill date can be changed. Even now, old period invoices can be amended. Only shipping bill number and shipping bill dates can be amended. Other details can't be amended. If the time limit of that November date has been lapsed, then GSTR 1, other details, that invoice number, invoice value can't be changed, but the shipping bill number and shipping bill dates can be changed right now, or the same can be added right now. Future advisories, the person should take care that what are the details which they are mentioning in GSTR 1 or GSTR 3B that should be matching with the shipping bill details. And the shipping bill companies or the person in charge of the vessels should file proper EGM, bill of lading details. CHS should also take care in filing the shipping bills and the details which mentioning in GSTR 1 and 3B should be matching, and the amounts payable should be lower than the amount paid. Now coming to export of services. First, earlier I have discussed that export of goods, in the export of goods, if the goods have crossed the Indian borders, then that means export of goods has been done. But in the case of export of services, there is 5 conditions. First of all, supplier of services should be in India. Secondly, recipient of service should be in India. Recipient of service should be outside India. Supplier who is supplying the services should be in India, and the receiver should be outside India. Place of supply for that supply should be outside India. Payment should have been received in foreign convertible currency, because government wants more and more foreign currency to come in India. So they have mentioned that foreign convertible currency, which is easily tradable on the foreign exchanges, should come in India. And government has also added, like from Nepal, Bhutan, the neighbor countries, they have allowed that if RBI permits, in that case, the payment in INR will also be considered as payments in foreign currencies. Fifth, the supplier of service and the recipient of service are not merely establishments of a distinct person. Distinct persons in this case means a person has a branch in a foreign country. That branch would be a distinct entity. If a person has a subsidiary or holding company in the foreign country, that doesn't mean distinct persons. In the service tax excise also, same condition is there, service tax, that distinct entity is not that the foreign company. If they are having any branch, then that will be a distinct entity. But if they are having a subsidiary or holding company, then they are separate legal entities and they are not the distinct persons. And in the case of export of services, if we pay the taxes on export of services or under unutilized ITC, we export the services under LUT. In both the cases, there is a manual process of refund. Application to the jurisdiction officer will have to be made in form GST RFD 01 within 2 years from the relevant date. In the case of export of services, relevant date will be defined from this export of service definition. Relevant date from the export of service definition, there is a condition that payment should have been received and place of supply should be outside India. And for relevant date, there are 2 conditions: that payment should have been received. Secondly, invoice should have been received. That is, supply has been completed. If the supply has been completed, in that case only the invoice is required to be generated. So there are 2 conditions. Firstly, payment has been received, and secondly, invoice should have been issued. But in some of the cases, when we have issued the invoice, payment have not been received, then the export of service is not completed. In similar case, if we have received the payment in advance, but the point of supply, time of supply has not come, then also export of service is not there. So in both the cases, both conditions should have been completed. From that, we can say that if payment has been received in advance. In that case, when the invoice is issued, that date will be the relevant date for the calculation of 2 years period for the time of supply for the export of service point. And in case invoice has been issued right now, but payment has not been received, in that case, the relevant date will be the receipt of payment. So the crux is, in both the cases, the later condition will be taken. If invoice has been issued and payment has been received in a later date, then in month in which the payment is received, for those invoices which have been issued earlier, the date of payment, the month in which the payment is received, that month will be considered as export of service for that amount. In the case the payments have been received, the payments are received at a later stage. If the invoice is issued in the previous period, amounts have been received in the current period, then amount of received in the current period will be the taxable value of export of services for the calculation of refund. And in the second scenario, if payment has been received in the previous period, invoice is issued in the current period, then the amount in the current period will be the invoice value. And 2 years will be calculated from the later date, later event. Members, now we have completed our export topic. Any member having a query on exports refunds, please ask that. Sumirji, export under LUT will be discussed at a later stage. Complete process I will be explaining. Raviji, can you explain the query which you have mentioned? Ajit ji, in case of export of services, payment is received in INR through NEFT. Please check the bank if the payment has been initiated by the foreign customer in dollars or in foreign convertible currency. The payment received in INR from the bank. In that case, there will be an FIRC that can be taken from the bank or the partner bank of that bank. If the payment has been received in INR only, that the foreign customer has sent the payment in INR only, then that should not be amounting as export of services. Then we have to pay taxes on that, as permitted by RBI, like from Nepal or Bhutan, the neighboring countries. Amit ji, there is a condition under Rule 89(4). If we are exporting the supply with payment of taxes, in that case, full value will be coming. If we are taking the refund under unutilized ITC, under LUT, we are exporting the goods under LUT. In that case, a formula has been provided by government under Rule 89(4). That formula is to be applied and the amount calculated through that will be refunded. It could be 100% refund or it could be a proportion of that refunds. It depends on the scenario, amount exported. If 100% export unit, then the complete unutilized ITC for that period will be refunded, or if there is a proportion of local supplies as well as foreign exports, then a proportionate refund will be allowed. Sumirji, majorly, you have said that how to file RFD1 and why the government is not refunding the whole refund. Sir, for filing RFD1, government has provided on your GST login the functionality to file the refund application. In case of exports, for chronological refund application should be filed. In that case, a circular 125 and circular 135 details of documents have been mentioned. We are also going to discuss those documents and the criteria how to file that RFD01. And secondly, you are asking that why the government is not refunding the whole refund. In that case, I want to say, if there is some error, basically manual applications are going in the case of LUTs or export of services with payment of taxes. The officer is checking the supplies as well as the ITCs. If there is any fraudulent documents on the basis of which you have taken the, or your assessee has been taking the refund, those amounts are not going to be refunded. Otherwise, the whole refund amounts are refunded. Secondly, the policy of the government is that lower and majorly lower refund should be issued to the assessees. In that case, thorough checkings, and the government in the future is going for the amendments wherein no refund policies will be there. The government is increasing the benefits in the exports rather than providing refund of IGSTs in the GST. They are making a new policies in the foreign trade policies, upcoming foreign trade, or that is that export incentive schemes, duty drawback schemes. In those schemes, they are increasing the exporters benefits and want to reduce the same in this GST regime. They have made group of ministers who are thoroughly checking, and in the recent meeting, mainly on 18th, I think so, they are going to discuss on that as well. First of all, they are going to remove that inverted duty tax structure. Thereafter, they want to go for reduction in exports. Recently, government has amended the law. They are not going to provide refund to each and every exports. They are going to specify the sectors or the specific exporters to whom the refund will be provided. Raviji, you can make a complete query and send me that with the documents which you want to ask. The same will be answered to you in 1 and 2 days. I will be sharing my email ID at the end of today's session. Now let us go to next topic. Now coming to the type of forms. These are the forms which we will be seeing in the refunds. That all the applications are to be made in RFD01. Earlier in the manual application forms, there is a form specified by the government is GST RFD01A. Now there is a form that GST RFD01, which is an automated application on the portal. Secondly, form is GST RFD01B, refund order details. Then a new functionality has been added by the government for withdrawal of refund applications. In many of the cases, if we have made any error in the refund application, then we can withdraw that application and again apply that application with a rectified mode. Or in case we do not want to take that refund, or some other issue is there, then government is allowed to withdraw the refund application. But the refund application can be withdrawn only till no show cause notice has been issued or payment order has been issued or provisional refund order has been issued. Basically, RFD 04, 05, 06, 07, 08. If these 5 forms have not been issued, till then we can make an application for withdrawal of refund application. First of all, we apply the refund application in form RFD 01. Thereafter, within 15 days, the officer should have to acknowledge or issue deficiency memo. Acknowledgement will be issued in form RFD 02, or deficiency. If there is any deficiency could be of various documents which we have to apply. The government has provided Master Circular 125, in which details of documents which are mandatory to be attached with the refund application, and the statements which we have to file. If there is any missing document, then deficiency memo is to be issued. Recently, I have seen various issues wherein officers are issuing deficiency memos if there is no deficiency in the application, basically on the basis of their interpretation, that is, the application could be time barred, or the application should not be issued in this type of application. There are several types of applications: that inverted duty structure, export of goods with without payment of taxes, export of services with or without payment of taxes. Separate categories are described in the portal on which we have to apply. If a wrong category has been issued or there is no deficiency, even then the officers are issuing our deficiency memo, which is wrong. We have, in that case, we otherwise we can apply the fresh refund application, or we can go for appeal for that application as well. Thereafter, provisional refund order. Government has provided a 90% refund policy only on the basis of acknowledgement without any verification. That 90% of the refund application amount will be refunded within a 7-day span on the provisional refund order basis, which is issued in form GST RFD 04. Thereafter, form RFD 06, that is refund sanction order, will be issued if all the amounts which is to be refunded is okay, or partial refund order could be issued. RFD 06 is the refund sanction or rejection order. On the basis, if the amounts have been sanctioned, then RFD 05 form, that is payment advice, is issued, which the payment advice will be sent by the GST to the PFMS for crediting this amount to the bank account of the assessee. Thereafter, order for complete adjustment. The government has the policy in the government has provisions in the GST that amounts could be withheld, or if there is any pending dues, pending liability which is to be adjusted from the assessee, the same could be adjusted from this in this form RFD 07. If there is any errors or any points which needs to be clarified, or the amount is to be rejected, before that a show cause notice is to be issued in form GST RFD 08, and reply is given in RFD 09. GST form GST RFD 10 is for embassies, specified organizations, which government has specified separately. Embassies, international organizations, they have to file return in form 10. They have to file their returns, and that returns, on the basis of that returns, RFD 10 form is also filed, and they will take the refund of that amount along with all the documents which they are providing. Form GST RFD 10B is for duty-free shops, duty-paid shops. Then RFD 11 is LUT. It takes only around 5 minutes to file that letter of undertaking on the portal. Earlier it was a manual process. Now it is only a 5-minute process, and the ARN which is generated on the portal will be the LUT number, which we have to mention all the invoices, export invoices, which we are exporting to the government. In all the process, in the whole complete process, if some amounts are adjusted, in the case we are filing unutilized ITC refund, when we apply the refund, suppose I have filed a refund application of 10 lakhs, in that case, and the refund order is passed for 8 lakhs, there is a difference of 2 lakhs which the officer has deducted. he said this 2 lakhs is ineligible refund because of several reasons, then that 2 lakhs is to be recredited to my electronic credit ledger. And that can be done through form PMT03. So this is the whole forms which are prescribed in the law for refund purposes. Now, a procedure. I have already discussed the same in the above slide. Now, I will be discussing it again. An application shall be filed electronically in form GST RFD 01 within 2 years from the relevant date, and within 15 days, the officer has to issue deficiency memo or acknowledgement. Acknowledgement will be issued in RFD 02 and deficiency memo will be issued in RFD 03. If there is a deficiency memo, then a fresh application has to be filed in RFD 01 for that period, and 2 years time frame for the time barring will be calculated from the fresh application date, not the actual earlier date in which there is a deficiency. So if we are filing the refund application on a second last date when the 2 years are completing, and the officer is issuing refund deficiency memo or after 14 days, earlier the time period will be lapsed for the new application. When we apply a new application, the order came as time barred. But recently, government has also provided with an opportunity for the assessees. In that case, if the date of the earlier application till the date of deficiency memo, the period starting from the application date till the date of deficiency memo will be added to that 2 year time frame for the calculation of time barring period. If in the earlier example, on the second last date, I have filed the application. After 14 days, he issued deficiency memo. In that case, those 14 days will be excluded for calculation of time barring, and the same time period which is left before to me, that is 2 days, second last and the last day, will again available for to me on from the date of deficiency memo. I can apply again if I have applied in within that 2 days. In that case, my application will be valid. Otherwise, that will be time barring. This is a welcome step and which needs to be come. If the application is complete, then acknowledgement is issued. Thereafter, refund order will be issued or show cause notice is issued. Here I have explained that within 60 days, total from the date of application till the date of payment to the bank, payment received in the bank account, the total time frame is 60 days. If there is an increase in that 60 days period, then interest policy has also been given. If I am eligible for the refund and the officer is not sanctioning the refund application within 60 days, then the time frame after that 60th day, starting from 61 to the sanction to the amount crediting date, the total period from 61 to that date, 6% interest or 9% interest is eligible to me. 6% is in the case refund order is not sanctioned, and after the refund order is sanctioned and till the date of crediting in the bank account, there is a rate of 9% will be given to me. Full refund, partial refund, rejection of claim, fully adjusted against tax interest due. I have discussed. अगर adjust हो रहा है तो RFD 07 will be issued. If rejected, then before rejection RFD 08, reply in RFD 09, and order in 06, payment advice in 05. Full refund, partial refund, RFD 06 and RFD 05. Now comes to supplies made to or by SEZ units or developers. In GST, supplies to SEZ are taken at par with exports. Basically, zero-rated supplies are defined as exports as well as supplies to SEZs. So, government has specified a an area as a specialized economic zones. And if we are supplying to that zone, it is also treated as those areas are not in India. Those are outside India. So those areas and the foreign countries, foreign areas are taken at par. And any GSTs which have been as an unutilized ITC, which have been taken from the vendors, or if we are supplying the goods on payment of taxes, those taxes will be refunded to us. There is a mechanism prescribed by government. That policy should have been followed. SEZs, if they are supplying to foreign countries, normal export procedure is to be followed. If they are providing the goods back to domestic areas, not to the SEZ areas, to the domestic areas, then custom criteria is applicable on that. Import duties and other duties are applicable on that.